Hi traders, it is the 23rd of June 2017. My name is Jameson. Welcome to Barringer Trading. We're looking at a daily vertical bar chart of Aaxn Enterprise. The ticker is AAXN. We're going to appreciate bullish technical strength here. We can appreciate this huge bull flag that's present. This is actually with some distribution. In the process of distribution, we started this markdown with the emergence of a lot of supply, but that supply didn't break this key area with a preliminary supply. So those that are new, the Wyckoff methodology identifies 4 market cycles, and that's accumulation, and then we have a markup, distribution, and then a markdown. So we had some distribution and attempted to make the markdown, but we didn't break this key level here. So this is preliminary supply. We rally higher, buying climax, automatic reaction, secondary test. The UA is just an upthrust action, and then we break down. This breakdown, because it's lower than the automatic rally or automatic reaction here, is labeled as a sign of weakness. And then we rally higher to test this level of resistance. It's a little bit lower. So anytime following a sign of weakness, that next rally is the last point of supply. That's a great short entry. And retrospectively, you can appreciate that because prices break down. The character that we break down with increased ease of downward movement and climactic volume suggests now that this is a selling climax. There's an attempt to actually break down. This is very bearish. There's no follow through. We rally back. We pull back. There's no supply, right? Lots of sellers. We retest it. There's no sellers. And then there's the emergence of demand, a lot of demand, off this base of support. That's a changing character. Prices then rally back, they pull back, we consolidate. And now here's another clue that this is a positive changing character, that this is all bullish accumulation, is that we have these huge selling efforts, big selling effort, unable to break this level of support. That means that they're having some difficulty with liquidity. They drive prices down, they absorb the supply, and then prices rally. We rally higher and we pull back. We confirm this level of resistance as support, and now we're trying to overcome all the supply here over the last 18 months, and we now just broke this long-term resistance. I like this trade above this level. I encourage longs up here, and if we lose this, stop out, who cares? Look to buy the 50 and 200-day simple moving average and then trade that above. I think that the amount of cause that we have, the amount of time spent in consolidation, definitely warrants a test into the highs. That's a 10% swing trade from where we are presently. The amount of cause, if we're looking at maybe October, right? So if this is the changing character, we had some buying here. We're going to say this is accumulation, this is reaccumulation. So if we look at October through now, let's see here, October, so here's 2016. We're right about here. So 1, 2, 3, 4, 5, 6, 7. I'm going to be conservative and take one of those away. So 6. 6 times 1 times 2, right? So it's 12. 12 plus a 24 gives us 36. So it gives us a $36 price objective if we break through this level of resistance. I think we have a defined level of risk. So we have a good risk-reward ratio. It justifies the position. We're going to see the presence of demand that's there. We have positive relative strength relative to the market. When we look at the relative strength compared to the actual industry, it's an outperformer. We're seeing that the actual industry is getting some participation, or actually the industry relative to the market's outperforming, and we're seeing that the industry is actually pretty flat to its actual sector. But that said, I think this is a great trade. We're going to watch this closely.